You're listening to Indications by the Conference Board.
Hello, welcome to Indications. I'm Elizabeth Crowfoot, Senior Economist at the Conference Board. You're listening to the U.S. Labor Market Roundup, our monthly podcast series where our labor market experts give you their reading of the latest jobs report released by the Bureau of Labor Statistics and then provide insights on a special labor market topic. Today, I'll give a brief overview of the October jobs report, and in a slight change of format, we'll jump straight into our special topic, the top 10 pandemic job market trends. Since this is our first post-election jobs report and we're expecting a new administration to take office in the new year, this is a great time to take stock of the recent trends that have been driving the labor market, including some major challenges that a new administration will be facing. Today, I'm joined by two regular guests and colleagues. First, Gad Levanon, our resident expert on U.S. labor markets and head of the Labor Markets Institute. Much of our discussion today is based on his op-ed piece in Forbes, also entitled The Top 10 Pandemic Job Market Trends. So be sure to check that out, as well as his other pieces in Forbes. I'm also joined by Frank Steemers, economist at the Conference Board, focusing on U.S. and global labor markets. Gad and Frank, thanks so much for being here today.
Thank you, Elizabeth.
Yeah,
Pleasure.
thank you, Elizabeth.
Great, so let's dive right in. So in a welcome surprise, we had a much better than expected jobs report. U.S. employers added 638,000 jobs in October, primarily in leisure and hospitality, and that was especially in restaurants, also in professional and business services and retail. As a result, the unemployment rate declined by a full percentage point to 6.9%. And that represents the sixth consecutive month of a fall in the unemployment rate since reaching a high of 14.7% in April. The labor force participation rate also increased, making up for the drop that we saw in September. And the total share of workers with a job also increased to its highest point since the start of the pandemic. So there are more workers looking for work and successfully landing jobs. On top of that, the number of persons on temporary layoff fell to its lowest level in 6 months, while the number of permanent layoffs also declined slightly, indicating that those that have been laid off are going back to their old jobs or finding new ones. But there's still some cause for concern. October's job losses were concentrated in the government sector. Granted, about half of those job losses were temporary census workers that went off government payrolls, but the other half were state and local government workers, especially in education. Overall, the rate of job gains is slowing, and the composition of those gains is also troubling. For the first time since the reopening of the economy in May, we saw an increase in the number of people who were working part-time involuntarily. So they want more work and can't get it. Also, a third of the unemployed have now been jobless for over 6 months, and that's up from less than 20% in September. And finally, unemployment rates of all racial groups are solidly in single digits, except for Blacks, which have the highest rate at 10.8%. So we are still seeing an uneven recovery among the different groups of people. Overall, we keep seeing a rerun of the past several months where we continue to see improvement in the labor market, but at a slowing pace and with some underlying fragility in the labor market. So with that set up, let's go straight into our special topic for today, and that will also shed light on some of these headline numbers and trends that I've been talking about. So as we all know, the U.S. economy and the labor market are experiencing a very unusual recession. As the fallout from COVID-19 continues, we have identified the top 10 pandemic job market trends in the U.S. that we think business leaders should be aware of and that will shape labor market decisions in the short to medium term. So first, I'm going to quickly read off the 10 trends, and then we're going to slow things down, and Gad and Frank are going to help me explain each of them. If you want to follow along or revisit them later, the 10 trends are listed in a bulleted format in the show notes. So the top 10 pandemic job market trends are, number 1, after a summer hiring sprint, job gains are slowing. 2, it is still difficult to find qualified workers. 3, people are leaving the labor force. 4, goods and services have switched places. 5, A K-shaped recovery is playing out in labor metrics. 6. Salary cuts and wage bifurcation are likely to continue. 7. Remote work is now in vogue. 8. City centers are in deep recession. 9. The coast shouldered the brunt of the job cuts. And 10. Large metro areas and vacation destinations were hardest hit. So those were the 10 trends, and I'm going to kick us off with the first one as it's very related to the headline numbers that I just read off. So number one, again, is after a summer hiring sprint, job gains are slowing. So we lost 22 million jobs over March and April, and we were able to recoup half of those jobs by August. But with job gains lower each month than the previous month, the pace of the labor market recovery is slowing pretty drastically, especially in September and October. We are now 10 million jobs below pre-pandemic levels, which is still just over half the job gains that we need. Even if we assume the same level of job gains each month going forward that we saw in October, which is 638,000, it would still take us until February 2022 to get back to where we were in February 2020. And likely the recovery is going to take much longer than that anyway, because not to mention that we have additional jobs lost that would have been created over time had we stayed on our original pre-pandemic trajectory. So bottom line is that the forward progress is slowing. So that brings us to the second trend, which is it is still difficult to find qualified workers. And Frank, maybe you can jump in here now and help us explain what we mean by this, especially with such a high unemployment rate. It seems like this is a completely counterintuitive trend.
Right. No, exactly, Elizabeth. I think, of course, the unemployment rate has already been coming down over the last couple of months. But basically, what we saw was that with the high unemployment rate, when we looked at different survey data, so for example, the National Federation of Independent Business, they asked their businesses how difficult is it to find qualified workers. We saw that more businesses were saying that it was getting a little easier, but not that much easier. It was like compared to the Great Recession, when employers said it was much easier to find qualified workers, we didn't see anything near that. When we looked at our own consumer confidence survey, and where people answer how difficult it is to get a job, then also there we still were seeing that it was not that difficult to find a job. And we actually fielded our own human capital survey among HR leaders, where we asked also them how difficult is it currently to hire or to find qualified workers, comparing pre-pandemic to September when we fielded this survey. And then even for we see a slight decrease in how difficult it is to find workers, especially for office workers. But for industry manual services workers, there's actually no change. And I think an important reason here is that usually when the unemployment rate goes up, there are a lot of permanent job losses. Well, this time there were many furloughs. And a lot of these people who were furloughed were not actively looking for a new job simply because they were expected to be recalled to their old job. So there, I think that was one of the most important reasons. And then, of course, there are, the virus is still out there, so it is riskier to catch it when you have to go to your job. So that could also have been a reason for people to be more hesitant to go back to work and to look actively for work. And then, of course, also thinking about people with childcare or with other dependents, they may also have chosen not to actively look for work, different than we have seen in other recessions.
Right. And that actually takes me straight into the third trend, because that childcare issue that you're talking about is really related to women. And the third trend is that people are leaving the labor force, and women are the people we're talking about here. They have heavily been concentrated in COVID-19 affected occupations. So waitresses, hairdressers, hotel desk clerks, childcare workers, home health care aides. All of these are face-to-face service jobs that have seen really high rates of unemployment because of COVID, and they're primarily occupied by women. On top of that, during the lockdowns and school closures, women have taken on a greater share of the childcare and the home responsibilities than men. And as a result, many women have had to step back from their jobs by reducing their hours, or they're completely stepping out of the workforce altogether. And this is impacting mothers, especially those with young children, as well as Blacks and Latinas who are more likely to live in single parent households. And now they have no childcare options and they have nowhere else to go. So they have to step back from the labor force to take care of their children. So these are the two groups that have really been most impacted. Ultimately, it threatens to reverse the progress that women have made over the last decade in their workforce participation. But there's also some other groups that have been impacted as well. Gad, do you want to tell us about those?
Sure. I know many of you probably remember that after the Great Recession and during in 2008-9, there was a lot of talk about delaying retirement, and we actually saw during and after the Great Recession, we saw the labor force participation of older people go up. Um, Now it's very different. Now we see the labor force participation of people over 65 go down, and the big difference between the two recessions is that the retirement preparedness from a financial perspective is very different. In now, both home prices and stock prices are continuing to go up. In the Great Recession, both of them dropped dramatically, and that made older people less prepared for retirement, so they had to stay in the workforce. Now it is very different. On top of that, the COVID, because it's more risky for older people, that probably pushes a few thousands of older people out of the labor force because they don't want to go back to the jobs they had if they were kind of frontline, high exposure jobs. So that's a very different trend that we're seeing in terms of retirement compared to the previous recession.
Great. So ultimately, we're seeing that women and older workers are the ones that are leaving the labor force much more than other types of workers. So that brings me to the fourth trend, which are that goods and services have switched places. So this has been a really unique recession, as Gad was mentioning, because overall spending on services has collapsed, while spending on goods, and especially durable goods, has been booming. If we look back at the Great Recession in 2008, 2009, people cut back on their goods spending while their spending on services stayed essentially the same because they still needed to get a haircut, they still continued to go out and eat occasionally. But now, because of the fear of contracting the virus, people have really cut down on their spending on face to face services, especially in leisure, travel, recreation. And instead, they're spending their money on alternative recreational goods like bikes and video gaming consoles. So, as a result, we're seeing more employment growth in these types of industries that are good producing and also that are associated with warehousing and delivery as people are increasingly shopping for their goods online. So then the next trend, number 5, is a K-shaped recovery is playing out in the labor metrics. And Frank, we know by K-shaped, we mean that, there are different parts of this economy that are recovering at different rates. How does this relate to the labor market?
Right. I think what we often, what we have been telling already over the last couple of months and what we're still currently seeing is when we, for example, look at unemployment rates, we see that especially for young people, it is much higher. We see that for minorities, it is higher. And when we look at, for example, across different groups of education, we see that especially the lower educated have been impacted by this crisis. When we think about the K-shaped recovery and going forward, we know that many of these people most impacted are working in occupations or on jobs that are especially impacted by COVID-19. And if, for example, what we're now seeing that the COVID-19 virus is spreading again across the US, and for example, New York, we have already heard that indoor dining is going to be stopped. That means that a lot of these workers need to be furloughed again or are going to lose their job again. While for higher educated people or people who are working in office occupations or professional management occupations, they can just continue because they can work from home, and therefore we see there a different recovery happening. So I think when we look, for example, at industries that are still the industries, think of performing arts, spectator sports, or people that work in accommodation and amusement gambling. There has been some improvement there, but job losses overall have still been much larger compared to, for example, the finance and insurance, or other more professional services industries.
Right. So essentially, there are some industries where working in a professional, white collar professional occupation has saved jobs because of that ability to work from home.
Right. Yeah.
Hmm. So that was our first five of our top 10 pandemic job market trends. So we're going to take a quick break now for some announcements, and we'll be right back with trends 6 through 10.
Can you, your team, or your company benefit from insights such as the ones provided in this podcast? They are immediately available when you join the Conference Board, a membership-based think tank that delivers trusted insights for what's ahead. Reaching across industries and geographies, we bring together our noted experts, senior executives from the world's largest companies, and nonpartisan practical research to help you address your most important business issues. Our membership packages are tailored to your organization's unique needs and budget. To learn more about our offerings, go to www.conferenceboard.org and click Join on the top bar to connect with one of our product specialists.
Welcome back. I'm Elizabeth Crowfoot, and you're listening to the U.S. Labor Market Roundup on Indications. Earlier in the show, we did a quick overview of the October jobs report, and now I'm speaking with Gad Lebanon and Frank Steemers about the top 10 pandemic job market trends. So let's continue with trends 6 through 10. Again, they're also listed for you in a bulleted format in the show notes. So number 6, salary cuts and wage bifurcation are likely to continue. Frank, can you tell us what we mean by this?
Right. I think what we often see basically after every recession, when the unemployment rate goes up, that means that there are more people looking actively for jobs. So it becomes easier for employees to find qualified workers, which shifts kind of the bargaining power for when you think about negotiating for wages. But also after many recessions, firms are very much in need to make changes and to save on a lot of costs. So they also need to lower some wages. So what we expect to be seeing, and maybe not yet at the moment that much, because as we have been saying, the labor market is maybe tighter than the unemployment rate would suggest. But at some point in 2021, we do expect that wage growth is also going to decline. For example, when we look at salary budget increase survey, that is a survey we field ourselves, where we ask employees what is happening to your salary budgets. They already say, many of them, that they have started to lower the salary increase budget, or they are saying that they don't know yet how this crisis is going to impact it. Um, but that basically means that the budget that is available for wage increases within a company is going to be smaller. So for people who are not switching jobs, they will already be impacted. But what we will likely see is that people who are switching jobs, so new hires, they are often in after recessions the group of workers that is most impacted, because they are more likely to be in need of new negotiations with their employers, and they have to react more to what is happening in the market. So especially for new hires, we expect that wage growth is going to be much weaker than it was before this pandemic.
Mm-hmm. So we know that compensation is one uh, part of our employment that's going to be affected. And so trend number seven is about remote work. Remote work is now in vogue. Gad, can you take us through this one?
Sure. Yeah, this is probably going to be the biggest legacy of COVID in terms of the economy, is the permanent shift to remote work. But it's already having an impact as well at the present. We know that probably most office workers in the US are now still working remotely. Um, that creates all kinds of discussions and issues within companies on how to shift to a remote work culture and recruiting and a lot of other dimensions. It also has impact beyond the work itself. So, for example, in trend 8 in our discussion is city centers are in deep recession. That a lot of this is because of the remote work. A lot of millions of people who used to come to city centers in large metro areas for work are not doing this anymore. And as a result, business activity in city centers is much lower than before the pandemic. We see using our Help Wanted Online, our database of online job ads, we see that hiring in principal cities or the main cities in metro areas is well below pre-pandemic level, where it is higher. The hiring is higher in other parts of the country. So that those two trends, the shift to remote work and the emptying of city centers, are very much related.
Right. So 7 and 8 really have a lot to do with where we're working now as a result of the pandemic. And um, trend number 9 also has a lot to do with that business geography component. So number 9 is the coasts shouldered the brunt of job cuts. Gad, do you want to continue with this one as well on that theme of business geography
Yeah.
Mhm.
Yeah, so we see very large variation in the number of job losses by state. And states that are in the Northeast and the Pacific clearly had a larger drop in employment and a larger increase in unemployment. A lot of it was because the COVID struck there earlier and more severely, and people were kind of more traumatized and were less willing to go out and about and spend. But it's also because policies, state restrictions in those areas were much more restrictive. So the end result is that employment losses in those areas were much stronger.
Yeah, and the last one, which is also related to geography impacts, number 10 is large metro areas and vacation destinations were hardest hit. Frank, maybe you can elaborate on this one a bit.
Yeah, I think in line with what Get was already talking about, that we see it especially on the coastal states. When we look at the metro areas, we see that especially large metro areas have been impacted. But of course also vacation destinations, because they are of course the hard hit industries that are most impacted, such as travel, lodging, and dining out. So similar, of course, to many of these big cities also being on the coastal states. So job losses have been larger, and employment rates are still more elevated there. Um, so I think, Gerd, do you have anything to add here?
Yeah, no, I think some of the large metro areas that have been very hard hit are also because they are vacation destinations like New York City and San Francisco and Boston, Chicago, DC. They are also large tourism and vacation destinations. People travel there to see the sights, and so that's one of the reasons why they are very hard hit as well.
Right. So actually, one of the states that has been hardest hit is Alaska, and I just think of all of the cruise ships that aren't
Yeah,
going up in that direction. So that's part of that dynamic as well.
yeah.
So those were our top 10 pandemic job market trends. So, aside from that massive shift to remote work that Gad was talking about, which has a lot of upsides for many of us, most of these trends are bad news for both businesses and workers. And one of the only bright spots here is that the unemployment rate is falling much faster than anyone expected that it would. And this is happening even though at the onset of this pandemic, we and many other economists also predicted that unemployment rates would remain at historically high levels for a very long time. So, Gad, with this sudden drop in unemployment, does this mean that we need to reevaluate the severity of the crisis?
Well, I think a little, yes. You know, the unemployment rate dropped much faster than I think anyone expected. 6.9 or 7%, depending on how you exactly measure it. That's still high, but it's not historically high anymore. And that's happening just 7 months after the beginning of the recession. Now we don't know what will happen in the future, and maybe the very large increase in new cases of COVID may lead to further job losses and higher unemployment rate. But the good news about the vaccine, I think it's very likely that towards the end of 2021, we will see a strong recovery in many of the jobs that are related to social distancing. And when it could be that when we kind of evaluate this episode 5-10 years from now, it will be much less impactful from the labor market perspective than, let's say, the Great Recession, where the recovery was very slow, and even 3-4 years after the recession, we still had a very high unemployment rate. So I think, and I think when this crisis started, many of us thought that the impact of the COVID recession would be larger than the Great Recession, but I suspect that with the benefit of hindsight 5 years from now, we will not conclude that anymore.
Great. Well, I love to end a show on such a high note, especially both of your predictions of it not being as severe and the fact that people will still be listening to our show 5 or 10 years from now. Hopefully
Yeah.
they'll rewind and revisit us. So that will wrap things up for today. I've been speaking with Gad Lebanon and Frank Steamers about the October jobs report and the top 10 pandemic job market trends. Gad and Frank, thanks again for joining me. And thanks to all of you for listening. Please join us for next month's U.S. Labor Markets Roundup, where we'll be discussing the November jobs report and another special topic. Don't forget to subscribe to Indications and other podcast series from the Conference Board through your favorite podcast app. Thanks again for listening. I'm Elizabeth Crowfoot with the Conference Board.
This has been Indications from the Conference Board.